It seems like the news media has been blasting the airwaves with talk of recession coming and the impending doom that is associated with that.
We're doomed!
And it's got me thinking a lot about recessions and specifically what types of businesses do well during a recession. In an earlier video, I talked a bit about what industries or business sectors do well in a recession. You might want to check that out for a little bit more context. But on this one, I wanted to focus on businesses or individual firms. In my research on the topic, I found sort of 6 factors that can play a part in businesses surviving a recession pretty well. It doesn't seem like every business has to have all 6 to survive. In fact, a couple of them conflict with one another, but it seems like if you have more of these ingredients, then that is going to be a better recipe to survive. So I just wanted to highlight the 6 here and then talk a little bit more about each of them. The first 2 factors have to do with the financials of a company, and the first one on the list is a strong cash flow. So what that means is you have a positive flow of money coming into the business, and that means that you have more cash on hand, which lets you weather the storm better. A company's business growth can decline in a recession, but as long as you're remaining profitable and taking in cash, you sort of build up that coffer, and that essentially buys you time. Recessions can be sort of a waiting game until, the economy starts to turn over and go back into an expansionary phase. So those with stronger balance sheets have a better chance to survive. The second item has to do with a low debt metric. So it's no surprise if you have less debt, you're going to have less cost around servicing that debt. You're not going to be subject to interest rates. And if a company finds itself in a situation where they have to take on more debt to service the existing debt, then they open themselves up to interest rate risk, duration risk, things like that. So just having low debt in general means you can use your cash reserves elsewhere to sort of weather the downturn in the economy and maintain profitability by not having to pay off the costs of that debt. Twitter is an example of a company in a debt problem. Elon Musk took on a lot of debt to acquire Twitter, and the company is not very profitable, and they will have trouble paying off those loans regardless of whether there's a recession or not. So it will be interesting to see how that one plays out in the coming months. The third factor has to do with brand value and specifically strong customer loyalty. So the idea here is if a company has a high brand value, then they can count on those customers even in economic hard times. The idea is essentially these customers are a little bit more sticky and they won't switch to lower cost alternatives as quickly. And that could be for a couple of reasons. The company might just have a proven better product, or the switch cost could be high. Companies with higher customer loyalty can essentially cut back on marketing costs during a recession, saving them some money there. Relying more on repeat business and the referrals from their loyal customers to sort of mitigate any recessionary risk. One other factor that has to do with brand loyalty that can help during a recession is these loyal customers are more likely and reliable to provide feedback to the company, which can help them prioritize the relevant needs of their customers during the recession. Apple is an example of a company with high brand loyalty. They are a premium product, but their customers really love them, and they have sort of a built-in higher switch cost. Once you're in the Apple ecosystem, it's costly to leave it. It's true that your customers may cut back on technology purchases during a recession, but if an Apple customer needs a new product, they're still likely to turn to Apple during the recession rather than switching. Fourth and fifth factors have to do with company focus, and they're actually direct opposites of one another, but when the strategy is employed well, either can work. So the first one is being a diversified company during a recession can help you essentially mitigate the risk of a recession. So a company with sort of a wide array of products or across a wide set of geographic markets can sort of weather a downturn in one of those products or one of those markets because they have reliance upon their other products and other markets to sustain them. Going in the opposite direction, companies with a more niche focus have advantages for a couple of reasons. First, sort of specializing can help create that loyal customer base that we talked about a little bit earlier, and that can help reduce economic risks that way. Additionally, if you are a company with a niche focus, you might have greater pricing power in your market because you might have more market share, which also is a result of reduced competition. So customers may only have you to turn to if they need that product, even in a recession. And finally, if you're more niched, you have more sort of focused innovation. You can be agile. You have a better sense of where the value can be found within that niche. General Electric and Procter & Gamble would be examples of broadly diversified companies. They have a wide range of business products and business lines, whereas Warby Parker would be an example of a niche-focused company. They focus pretty exclusively on eyewear, but they have a loyal brand following. The sixth factor has to do with people and talent at the company. So strong leadership at a company can help make the necessary and the right decisions to either keep a company solvent or thriving even in economic hard times. I know people like to rag on CEOs, they get paid too much, things like that. But sometimes leadership and the decisions they make truly can steer the fortune of a company for better or for worse. Beyond the leadership, though, a skilled workforce really matters as well. Because a skilled workforce can innovate and adapt to keep the company profitable when the sort of economic winds shift, and sort of being that agile and adaptable workforce comes down to if they can execute or not, and that will really help sort of shift the tide of the company one way or another. Hopefully that gives you a sense of some factors that can matter for if a business can weather a recession or not. Let me know in the comments below which one you think is the most important, or if you think I forgot one. Thanks for watching.